Good morning and welcome everyone once again to the Pensions Committee and Pensions Board on a Dreek Thursday morning. In accordance with Section 43 of the Local Government in Scotland Act 2003, the convener has directed that this meeting, myself, will be conducted in such a manner as to allow remote attendance by elected members. This meeting will also be live streamed via our website and thereafter on the Falkirk Council Committee's YouTube channel for members of the public and to view. At this moment in time, I'm going to actually do introductions once again, if you don't mind, round the room. I'm going to start on my right-hand side.
Douglas McNaughton, Pensioners Representative.
Olga Potapova, EY Ernst & Young, Senior Manager.
David McLeod, Internal Auditor with Falkirk Council.
Sarah McPhee, Senior Internal Auditor with Falkirk Council.
Justina Bennett, a Senior Pension Fund Accountant.
Bruce Miller, Chief Investment Officer at Lothian Pension Fund and Advisor on the Joint Investment Strategy Panel.
Good morning, my name is Amanda Templeman. I'm the Chief Finance Officer for Falkirk Council.
Catherine Carruthers, Pension Manager for Falkirk Pension Fund.
Councillor Lorna Binney, Falkirk South Ward and Chair of the Pensions Committee and Board.
Good morning, Brian Perry, Democratic Services Manager of Falkirk Council and Clerk to the Committee.
Sophie Dick, Democratic Services Graduate for Falkirk Council.
Good morning, Councillor Jim Flynn, Falkirk Council.
Councillor Ewan Steinbank for Falkirk South as well.
Tony Calleary, Unison Rep to the Board.
Andy Douglas, Durham Council and Committee Member for Unison.
Got some members online. Could we start with Councillor Sinclair?
Morning all, Councillor Ian Sinclair, Falkirk North Ward.
Councillor Quinn. Councillor Quinn, could you introduce yourself, please? We'll move on. We've got Mr. Morrison, could you introduce yourself?
Hi, Ed Morrison, Head of Finance and Resources for Scottish Children's Report Administration and Pension Board Member.
Mr. Murphy, could you introduce yourself, please?
Morning everyone, it's George Murphy. I'm the Interim Chief Finance Officer at Stirling Council.
Mr. Roman.
Hello, Hassan Rohiman, partner with EY and responsible for our external audit.
That's lovely. Is that everybody that's actually online? Introduce themselves now. Councillor Quinn, are you there? Can you introduce yourself? Thanks. So we'll move on. I don't know if Councillor Quinn's there or not. Now, at this moment in time, obviously, with your permission, I would like to ask everybody in the room and online if we can have 1 minute silence in remembrance of Queen Elizabeth I. Thank you. Thank you, everybody. We'll now start the business formally. Also to mention agenda item 11, it's exclusion of the public. Once we get there, we'll have a wee short comfort break. Thank you. Do we have any apologies, Mr. Peary?
Yes, convener, we've got apologies from David Morgan of SEPA and David Wilson from Unison Client Manager Council.
Thank you. Now moving on to declarations of interest. Members should declare any financial and non-financial interest they have in any item of the business at this meeting, and identifying the relevant agenda item and the nature of the interest.
Okay, thank you. Thanks, Sam. Okay, I'm afraid I've got to go now. Okay, thank you for all your time, Sam. Okay, take care. Enjoy the rest of your.
Moving. So apologies.
We've done apologies.
Yes, next on the agenda is the minute of the joint meeting of the Pension Committee and Board that was held on the 25th of August 2022. It's on pages 3 to 8. I'll give you a minute to have a wee look at that.
Chair, could I just mention I'm not listed as being in attendance, and I was in attendance. Not that I suppose that will affect the record particularly, but
sorry, can I just clarify? I couldn't quite see who was saying that.
Sorry, it's Douglas. Douglas Not in the pensioners rep. I'm not listed as being in attendance or even being in an apology. Indeed, I don't exist. But I was honestly here on the 20th.
You were. Apologies that will.
That's all right.
So has everybody had a look at the minute? Do we agree the minutes?
Could I point out just, I wasn't at the meeting actually, but I see David Wilson, Unison, is listed here as still in council. I think it's actually Club Manager.
Thank you for that information. We will note that. Thank you. On now to the main part of the business. Agenda item 4, external audit annual assurance.
Thank you. This report is the 21-22 Internal Audit Annual Assurance Report. The purpose of this report is to summarise the work Internal Audit have undertaken over the course of last year and to provide an overall opinion on the Council's arrangements for risk management, governance and control based on that work. The report also comments on our compliance with the public sector internal audit standards. As you can see from section 2, I asked the committee to note that sufficient internal audit work was undertaken to support a balanced assurance and that internal audit can provide substantial assurance on the fund's arrangements for risk management, governance and control for the year to the 31st of March 2022. Section 3 of the report explains the reviews undertaking as part of the 21-22 Internal Audit Plan, which was approved by the Pension Committee. Section 4 describes the approach taken for the internal audit work. It is noted at paragraph 4.4 that a sample of 60 was taken, and paragraph 4.5 details the noted minor discrepancy. As stated, this has now been rectified with additional checks implemented. Paragraph 4.7 to 4.11 notes the impact of a complex cyber attack on one fund employer, which has resulted in detailed guidance being issued. In order to mitigate an incident or attack, the risk has been included in the Council's and Fund's risk registers, as well as being in receipt of a range of external assurances. Section 5 of the report comments on our compliance with public sector internal audit standards. These set out the principles and practices that we must comply with, and every year we're required to undertake a self-assessment against the standards. This has given reassurance that we operate in line with the standards. This was undertaken by internal audit during March 22. There's also a 5-yearly external assessment, which the section last underwent in 2018, and we were found to be compliant. Thank you. David and myself are happy to try and answer any questions that you might have.
Thank you, Sarah. I'm going to open it up now. Do we have any questions or any comments? Is that Councillor Steenbank?
Yeah, I was just checking my notes. Thank you, convener. I just had a quick question on the note at 4.5 about the 2 minor discrepancies. Were these on the employer side or on the fund side?
I'll hand you over to my colleague David, who'll be able to answer as he did all the work on it.
The discrepancies, it would be with the employer side, with the payroll sections at each fund employer. They'd be responsible for providing the information to the pension section. But I think with the discrepancies as well, I think the pension section contacted the employers and it was rectified.
Thank you very much. Just wanted a bit of clarification as a new member. Appreciate it.
Councillor Flynn, do you have a question? No. No more questions then? Right, thank you. So the recommendation is it's recommended that the Pensions Committee and Pension Board notes the internal audit can provide substantial assurance in respect of the fund's arrangements for risk management, governance and control for the year to 31 March 22. Do we note this? Thank you. Moving on to agenda item 5, it's the internal audit plan for 22-23. We've got Sarah once again to take that.
Thank you. This paper sets out our proposed programme of work for 22-23. After discussion with the pension manager, there are 2 main areas for review. Firstly, at paragraph 4.1, we will undertake transactional testing on the fund. It will be achieved by a sample checking of new members, pensions rights having transferred in and transferred out of the fund are correctly accounted for, retiring members have received correct pension payments, lump sum payments have been correctly paid, and iConnect controls are operating effectively. At paragraph 4.2, we'll follow up on the recommendations made in 21-22 internal audit review on the fund's cybersecurity arrangements, reviewing completeness of the implementation of the recommendations and that the assurances are consistent with mitigating controls. At paragraph 4.5 details the ongoing work that is being conducted with the pensions manager to understand the key risks associated with the merger of Falkirk and Lothian pension funds. And in paragraph 4.3 to 4.4 and at 4.6 provide background to the audit process, including the preparation of an annual assurance statement. To finish, I draw your attention to the recommendations at paragraph 2.1. In particular, can I ask the committee approves the internal audit plan for the year, but to bear in mind the need to be flexible and the internal audit will direct resources to where they're most needed. Thank you, and happy to answer any questions if you have any.
Do we have any questions on this agenda item? None.
Sorry, yeah, I've got a question.
Oh, sorry.
Sorry. It was mentioned in the previous paper that there's next year, I think we're maybe due up for the external review again. Should that not really be built into your audit plan as well to cover that piece of work associated with that external review?
We have it built into the main Falkirk Council audit plan, not just particularly for the pension side of it. This audit plan is mainly for the pensions work only that we've got allocated out, but the 5-yearly audit plan that you've talked about is part and parcel of the whole Falkirk Council audit plan.
Got another question from Mr. Morrison.
Hi, thanks, Chair. It's just to make sure I'm understanding the plan. Assume you would do transactional testing every year, and do follow-up of prior year recommendations every year. Are we saying for the coming year the main piece of additional assurance work is on the merger? In the way that you did cybersecurity this year, you're focusing on the merger next year. Have I understood the plan right?
The main focus is going to be on our transactional testing and the follow-up of the cybersecurity. The merger work is going to be ongoing continually, so we've not really got an end date. It'll be as and when we're required with the pensions manager. So it's nothing we can do a specific segment of work on and then conclude at the end, because it'll just be continually ongoing until the merger is complete.
Okay, so you do transactional testing every year, and you would normally follow up recommendations, and there's ongoing work on the merger. There's no specific other operational area that you're going to look at in the coming year in the way that you looked at cyber this year.
At the moment, we after discussions with the pension manager, we have got no particular area that we'll be concentrating on like cyber was last year. However, we feel it's important to do follow-up in cyber. It's not necessarily that every year we'll do follow-up. It depends on what the nature of that audit was in the prior year to if it requires the follow-up.
That's great, thanks. Just making sure I was understanding the plan. Thank you.
Thank you. Do we have any more questions, comments? None? It's recommended that the Pensions Committee and Pensions Board agrees proposed Falkirk Council Pension Fund General Audit Plan 2022-23 and notes the annual assurance report will be provided. Agree? Thank you. We're now moving on to agenda item 6, annual audit report, and this will be introduced by Catherine Carruthers, pension fund manager, and the main part will be Olga Potapova from Ernst & Young. Thank you.
Our external auditors are normally appointed for a period of 5 years, but due to the pandemic, this is our 6th and final year with our current external auditor, Ernst & Young, who I will refer to as EY going forward. It's how they refer to brand themselves on their audit report. Olga Potapova from EY will present the annual audit report, which is attached at Appendix 1, and I will touch on some of the key takeaways and points of note. The first thing to note are the formal undertakings and representations that are contained in the proposed letter of representation to EY from the Chief Finance Officer and Chair of the Pensions Committee, and that's attached at Appendix 2. The proposed response to the letter from EY to those charged with governance is attached as Appendix 4. The audit identified 2 unadjusted differences which management has chosen not to adjust on the grounds of materiality. These differences are 19 million, which relates to an undervaluation of private equity and other complex investments. This arose because the valuation of some assets as at 31st March 2022 are not available to us when we're writing up and pulling together the report and accounts. And we have a statutory deadline by which we must get the unaudited report and accounts published. So we can't actually wait for the up-to-date information, but that up-to-date information is available when we get to the audit, which is what results in the differences. We prepare on the best available information, but the audit's done on actual information. The other difference was in respect of 9.4 million, which related to a reversal of a corporate action posted by our custodian to the incorrect period, which was April 2022 instead of March 2022. To put these differences into context, the overall materiality limit that EY have set is 1% of our fund, so 32 million, and a tolerable error level is 50% of that, so 16 million. And they will highlight to the committee any error that's above £250,000. The reason we chose not to make an adjustment was because the financial statements were prepared with the best information that was available at the time and was done in line with the required statutory guidelines. And an explanation for not adjusting the financial statements for the identified differences is included in the letter of representation, which is Appendix 2, and it's actually attached to the top, so it's the first document. The differences are above EY's tolerable error limit. However, EY have indicated that they are satisfied that the impact is below the overall materiality and would not prevent an unqualified opinion being provided. The fee for the audit for 2021-22 is actually lower than 2020-21, so the previous year, and is set at 28,430. And before I hand over to Olga, I would just like to say that from the team at Falkirk, we would like to thank EY for the work that they have done with us over the years. It's been much appreciated and valued.
Thank you very much, Catherine. I believe we have Hassan online, so I would like to give him word to make initial introduction, and then I will talk you through the remaining part of the report. Thank you.
Thank you, Olga. Thank you, committee. Just to reiterate, in terms of our work is nearing a conclusion. We're based on the work that we've undertaken. We anticipate issuing an unqualified opinion on the pension fund's financial statements, and in respect of our wider scope responsibilities, there are no significant issues to bring to your attention. As Olga is in the room there with you, I'll now hand over to her to run through the key points of our report, and between us we'll be happy to take any questions which you might have.
Thank you, Hassan. I believe the main work is already done here for me, so I will just briefly talk you through the remaining points. So as Catherine outlined, this is our 6th year of appointment, so this is our final and last year, and we will follow up on completion of our audit procedures, the Audit Scotland handover protocol. So next year you will have a new auditor. So you will notice in this report a number of statements have been put in square brackets. This is purely to reflect the status of our audit work procedures at the time of preparation of this report. So upon completion of financial statements, procedures and signing and receiving the signed response on the letter to those charged with governments and letter of representation, we will obviously finalize our report before submission to the Audit Scotland, and as always it will be published on the Audit Scotland website. So as always, our audit is divided into parts. The first part is the core financial statements audit, and as Hassan indicated, we have not identified any issues that would impact our audit opinion. The key components of our audit opinion is in fact summarized on page 10 of our report. So we have not identified any issues here that I would like to draw your attention to. The second part is, as always, is our wider scope audit, where we require to conclude and give our judgment and consideration of 4 wider scope public sector dimensions, which is financial management, financial sustainability, governance and transparency, and value for money. You will see in the executive summary and the conclusion pretty much summarized in the wider scope section of the report. All areas are green. We're using RAG rating, and this is a great result. I'm pleased to say that any recommendations that we raised in the last 6 years, committee and management and board addressed. So we don't really have any new recommendations this year. So this is, I believe, a great results and achievement. One of the key area of our audit focus remains to be going concern. So this is driven by the audit standards, revised audit standards, and we require to undertake greater challenge of management assessments of going concern, including testing of the adequacy of the supporting evidence that we obtained. So management has prepared going concern assessment this year and provided detailed forecast, which we reviewed and challenged. And obviously, the fund is also established under the secondary legislation of the Public Service Pension Act, and therefore therefore considered to be going concern until notification is given that body will be dissolved or all its functions transferred. We have received no such notification, therefore accounts is prepared on going concern basis, and going concern pretty much treated as business as usual in the financial statements. As Catherine already pointed out, there were two audit differences identified. One is for level 2 and level 3 investment assets. This is the standard audit difference based on the timing of information when it's become available to the auditors for the capital gain statements, and this information purely is not available to the pension fund finance team at the time of preparation of the draft accounts. So historically, there's been a difference that we identified over the whole period of our appointments. It's never been adjusted and never been material for our audit purposes. In addition to that, it's obviously was one additional error identified this year when Northern Trust basically incorrectly posted or incorrectly not reversed corporate actions in the correct accounting period. So that was a new error identified this year of 9.4 million. But again, we consider this impact on our audit opinion, on our overall audit methodology and materiality, and concluded that it will not affect our audit opinion in any way, and it will not be material for the users of financial statements. Therefore, we've been comfortable that both errors can remain unadjusted. That's pretty much all I wanted to say today, and myself and Hassan are happy to take any questions.
Thank you very much, Olga. I'm going to open it up for questions. Councillor Steenbank, do you have a question? Oh, no, sorry. This is it. Mr. Harriwer, have you got a question?
Andy Douglas.
Mr. Douglas, I beg your pardon.
It's not really a question, it's more an observation that in the financial sustainability exhibit 1, it's very welcoming to see that we're actually going to return a surplus going by the 22 valuation. And I think that's been a long time since we've been in the black as far as that's concerned against liabilities. So it's very welcoming.
Thank you very much. Yeah, that's a good observation, and it's welcome, isn't it? So no more questions, no, or comments at all? And just to say thank you very much, Olga. That was we really appreciate the work you do, and I notice your conclusions that there was no disagreement during the course of the audit over any accounting treatment or disclosure, and you've encountered no significant difficulties in the audit. We really appreciate that. Thank you. Thank you. I'm now going to talk about the recommendations. The Pensions Committee and Board are asked to note the annual audit report for 21-22, the intended and Sorry, who's...
It should be finished by 11:30. How many am I booking?
He's going on to mute.
That's right. I'll continue then. The intended and qualified audit opinion and the two identified audit differences, to note these, and also the Pensions Committee is asked to agree a letter of representation addressed to Ernst & Young from the Chief Finance Officer and Chair of the Pensions Committee, and the response to the Ernst & Young letter of the 26th of July 2022 addressed to the Pensions Committee. So do we agree, everyone? Yes, thank you. To move on now to the agenda item 7, audited pension fund annual report and accounts, and a Chief Finance Officer, Amanda Templeton, will take this report. Thank you.
Thank you, Convener. So the purpose of the report in front of you today is to ask a committee to approve the audited accounts. At the August meeting, the committee considered the unaudited accounts, and as you've just heard, the accounts have now been through the audit process and EY plan to issue an unqualified opinion. Section 4 of the report on page 75 of the agenda reports that a number of presentational changes have been made, but there's been no significant changes since the accounts were considered by committee in August. During the meeting in August, I highlighted a number of key points from the accounts, and I won't go through all of those again, but I'll just reiterate a few sort of headline figures. The closing net assets as at 31st of March 2022 for the fund was 3.2 billion. The estimated funding level as at 31st of March 2022 was 113%, albeit that represents a point in time, and I think we discussed that slightly in August. There is upward pressure on the cost of future benefits because of the higher inflation, so that means that members will receive higher increase to the benefits being earned and therefore paid. And again, I think we covered a little bit of that at the August agenda in terms of some of the information that Hymans had provided in the valuation. The investment return information highlighted a return of 13.1% for the year against a benchmark of 6.2%. And we noted that provides reassurance that the fund's investment strategy is working well, not just for 21-22, but also from that longer term point of view. And the management commentary to the accounts notes the risks, particularly around investment activity and the increasing risk due to economic volatility, and the conflict in Ukraine is highlighted in the management commentary. So as highlighted at the August committee, the accounts are subject to Local Authority Accounts Regulations 2014, and that's very prescriptive in terms of the timeframes for approval and signing the audited accounts. The accounts should be approved by the 30th of September each year, which is what the purpose of this committee and consideration of this report will fulfil. And immediately following approval, various statements in the accounts must be signed and dated by the appropriate person. And then following signature, the accounts will be passed to EY. Once the audit certificate is signed and included in the accounts, we have a duty to publish those accounts no later than the 31st of December each year. And finally, I'd just like to take this opportunity to thank the pensions team, particularly Justina, Alistair, Catherine, for all their hard work in pulling these accounts together, which is certainly not a simple task. And I'd like to also reiterate my thanks to EY for their support over the past 6 years. Happy to take any questions. Thank you.
Thank you, Amanda. I'll open it up for any questions or any comments now. Thank you.
Sorry, yeah, just a quick point. You mentioned that there's going to be obviously an increased disbursement next year due to the cost of living increase. Can you confirm, will the Falkirk Fund, or indeed once it's merged, the new fund, be basing its increase on the government state pension increase, of which is looking at like what 10.1% or something at the moment? Can you clarify how that's calculated, or what allowance you have written into this pending a final announcement of what the actual increase will be in the next financial year?
Thank you. That's an important question. Catherine, could you maybe answer that?
Yes, certainly. So the annual pension increase we apply each year is dictated and it's set out in statute, and it is always the movement in the consumer prices, currently that is, consumer prices index between each September. That will be announced at some point after the 14th of October, because it's always the following month. So we should have an indicative feel for what the percentage increase will be before the end of October, but then that's not confirmed by government until Q1 of the following year. So that's when it gets written into the legislation, but the indicative will be whatever the movement is in September in CPI.
Yeah.
Does that answer your question?
Yes, thank you. That's right.
And that's a very pertinent question, Mr. McNaughton. It'll be on everybody's minds at the moment. Of course, yes. Yeah, I've had people come to me too with that question. Thank you.
Sorry, yeah, I mean, obviously, those so the triple lock does not actually apply in this instance. It's purely one index as opposed to the three that the state pension applies.
That's correct, but the big difference is that unlike for active members, where if the movement in the consumer prices index goes negative, our benefits reduce. For pensioners, the pension that's in payment will never reduce. If it's negative, there's just no increase.
Yeah.
And then it is just that one measure we use, which is that movement in a consumer prices index.
Thank you, that's very helpful.
Going to continue now with any more questions or comments? No? I'll move on to the recommendation then. The Pensions Committee is asked to approve for signing the Audited Pension Fund Annual Report and Accounts for 21-22 and for their publication on the Fund website. Do we agree? Thank you. Moving on now to agenda item 8, General Governance Matters, and our Pension Fund Manager, Catherine, will take this report.
Nearly forgot to switch on my mic there. So the first item, which is with regard to the annual return that the fund makes to the regulator, is really there just for information. And it's just because we've had a turnover of key personnel. And it's just to let you know that we have done all the updates we need to do to the exchange to make sure that we get notified correctly and we can actually upload all of the information we need to do for the regulator when it comes in October. We're also currently working on our data quality to make sure we can improve, or hopefully improve, the quality score that we submit as part of our scheme return. The next item, you might wonder why I've put this in here, because it is particularly relevant to England and Wales because it's Action Fraud, which is the UK's national reporting centre for fraud and cybercrime, where you would report if you've been scammed or defrauded or in England, Wales and Northern Ireland. In Scotland, it should be Police Scotland. But the webinar is a free webinar and it focuses on a topic which is UK-wide. It is about pension scams. It is about being defrauded. And the webinar will provide insights as to what the various law enforcement agencies, regulators and other authorities do with the information reported in addition to those various pension fraud allegations of crime. On the webinar, the National Fraud Intelligence Bureau will provide an insight from one of their analysts who studies the statistics and trends of pension fraud. And there'll also be an advocate from the National Economic Crime Victim Care Unit who will provide a look into their work and how they assist victims. So it's one that will have some relevance if you're interested. So that's why I've brought it out and put it there. So if you want to, you can. If you don't want to, you don't have to. I've also put down the training events. Fundamentals is still open for registration if anybody wants to. It's 3 days covering the fundamentals aimed for pension committee and board members. There's also the LGPS governance conference for 2023, which takes place the 19th and 20th of January at the Cardiff Marriott Hotel. That's still taking bookings. And the last training event, which is the SPLG one, still don't have a date for it, but I'm hoping that will be set at the next SPLG, which is the 7th of October. So should hopefully have some more information on that very soon. The roundup, this is a very short report this month because we've only had one recently. It was just to say, last month I said the DWP were looking at appointing Dominic Harris as the pensions ombudsman. They are now doing that and he will take post on the 16th of January. And the final thing to note is that the next joint meeting of the committee and board is expected to be the 1st of December.
Thank you, Catherine. And just to mention about the training, you know, I think it's a very good thing for the Pension Committee and the board, you know, to consider. I am now going to open it up for any questions or any comments.
If I could just add to build on what Councillor Binney said, reasonable travel expenses are reimbursed by the fund if you are travelling on fund business. So it's just to make people aware, because I know there are some new committee members who might not be aware of that fact, but if you're travelling on fund business, reasonable expenses, if you're a Falkirk councillor, you put it through MyView.
Thanks, Catherine, for clarifying that. That's important. As I say, do we have any comments, questions? No? Okay, going to the recommendations now. The Pensions Committee and Board invited to note the contents of this report and also the annual return to the Pensions Regulator. Do we agree? Thank you. Moving swiftly on, we're now on agenda item 9, which is the market review and fund manager performance, and Mr. Albert Chen is going to present this. Thank you.
Okay. Thank you, Chair. Good morning, everyone. So this update on market review and fund performance is to the end of June. Q2. I know we've recently covered the end of Q1 at the last meeting. In terms of markets, Q2 was another volatile market, having with risk assets having sold off during Q1 with the outbreak of the Russian invasion of Ukraine. Q2 saw more volatility in markets as commodity prices rose. And also concerns about central bank activity to try and curb inflation also impacted markets. So equities were down almost 9% in sterling terms for the quarter, and bonds also sold off by double digits as rates and interest rates rose on the back of central bank activity. In section 4, we talk about the fund strategy. And in 4.3, we have a table that shows the evolution of the fund's policy group allocations over the past 12 months on a quarterly basis. So the main thing I would highlight there is the right-hand column, which shows the position as at 30th of June relative to the target, a slight overweight to equities, more or less in line in relation to real assets, and then underweight positions to both non-gilt debt and LDI, which the fund has benefited from as rates have been rising. In terms of the position, the most recent position that we have as at the end of last week shows that the allocations are broadly similar to the position as at the end of June. So not much change there. The other thing to highlight is that the other allocation, policy group allocation, so that's the last row in the table, you will see that that has steadily reduced over the past 12 months. That's in line with the ongoing disinvestment from the Baillie Gifford Diversified Growth Fund, which has now been fully divested from. In terms of fund returns, in section 5, the fund returned minus 4.8% over Q2. That was ahead of the benchmark return of minus 11%. Again, it's important to highlight that the quarterly return is really for monitoring purposes. More attention should be focused on the longer term numbers and how the fund performs over the longer term. Those longer term returns show that the fund has returned 7.5% since 2001, ahead of the benchmark return over 6.7%. And the 5-year return of 6.4 is again also ahead of the benchmark return of 4.6%. Amanda commented on the funding position of the fund from Hymans as at the end of March. We've got some information there that shows that the fund value has increased from the last valuation. At the last valuation at March 2020, assets were valued at 2.3 billion. That has increased to 3.2 billion at mid-August. And given that interest rates have risen quite considerably, we estimate that the funding level has improved. That was all I was going to say in relation to the paper. There's obviously more detail in the remainder of the report regarding individual manager returns, etc. But I'll just pause there and happy to take any questions. Thank you.
Thank you, Mr. Chen. I actually have a question myself, and basically I know we can't predict the future too much. I suppose in your sort of business you can in some ways. However, with the ramping up of conflict in Ukraine, between Ukraine and Russia and perhaps the rest of the world, is there a cause for concern at the moment because of that? Is that something that we are closely monitoring? I don't know if you can advise me that. Or
Sure. I mean, it's a good question. I mean, at any time, there will always be something on the radar that will be a risk that needs to be taken into account and considered. Arguably, a lot of the volatility that we've already seen year to date reflects a lot of that potential risk that has occurred in Russia and Ukraine. The main thing probably to think about in terms of how you can be prepared for it is to have a diverse portfolio and also to have a diverse range of strategies. So by that, I mean that you're not invested in the same type of equity fund or the same type of debt, etc., etc. And so the fund is quite well positioned in terms of perhaps relative to some other funds that may be a bit more concentrated into a particular style. So, it is something that your investment managers will be monitoring, and also something that we, in terms of working at Lothian with yourselves, are also considering in terms of how the funds are positioned from a strategic asset allocation perspective. So, short answer, yes, we are monitoring it. There are always risks that we need to be aware of, and it's important to have diversification in your strategy, which is what you have.
Thank you for that, Mr. Chen. That was reassuring. I'm now going to open it up for other members if they've got any questions or any comments at this moment in time. None? Okay then, we're going to go to the recommendations. The committee and board asked to note recent investment market developments, 2, the fund's strategic allocation, the fund's performance for the period ending 30th of June 2022, and the investment monitoring activity of the JISSP. Do we agree? Thank you. We're now going to move on to engagement, agenda item 10, which is engagement and voting activity, and our pension fund manager, Catherine, will take this. Thank you, Catherine.
Thank you, Convener. This report addresses the financial and reputational risks for the fund arising from ESG issues that the Pension Committee has previously identified. The report and appendices also address how the fund uses its shareholder power to invest responsibly. The fund uses a dedicated engagement specialist for this purpose, Hermes EOS, and they have been appointed for a period of 4 years, and we are fast approaching the end of the first year of appointment. Hermes will provide 3 public reports each quarter: a voting report. This shows the number of votable meetings held during the quarter and an overview of how those votes were cast. An engagement report showing the split of engagements by region and theme applicable to our fund. and a public engagement report commenting on the engagements that they've undertaken that quarter. The highlights report, which is not a public report, has been uploaded to the SharePoint portal, and the committee and board are asked to treat this document confidential. Over the last quarter, Hermes made voting recommendations at 49 meetings covering 989 resolutions. At 27 meetings, they recommended opposing one or more resolutions. They also recommended voting with management by exception at 8 meetings and supported management on all resolutions at the remaining 14 meetings. They've also engaged with 37 companies in the fund's portfolio on a range of 121 ESG issues and objectives.
Thank you, Catherine. I'm now going to open it up if MD has any comments or questions. None? None. Okay, I'll go to the recommendation. The Pensions Committee and Pension Board are invited to know and comment on. Apologies, Bruce.
So, yes, sorry, I just wanted to interrupt there. It was really because we got asked a question. You're aware that David Morgan, the chair of the board, is not present, but he has been engaging, you'll be glad to hear, in between, and he's been asked a couple of questions. I thought I should maybe cover them at this point. It seemed relevant to this particular section and also to the prior paper. So the first question that he asked about was, he referred to the prior paper section, paragraph 3.1, and he was asking about the way the way it was written, which he felt suggested that the attempt to reduce greenhouse gas emissions had affected oil prices in an upward direction, and he was sort of objecting to the wording there. I've reread the wording, and I'm quite sure that we're correct in the wording that we used. It has had an impact on oil prices, along with supply and demand in general. Supply has remained low and that's driven oil prices up because demand has obviously recovered post-COVID. So just to clarify that for David's purposes. So that was number one, and then he followed up with some questions on engagement and divestment, and I'll read out what he said here, and this is from the last meeting that you were all at. I'd also like to support the views expressed by Councillor Quinn that the stance of the fund regarding the risk threshold for moving from engagement to divestment remains very unclear to me. I remain uncomfortable about that. And my response to that is that risk thresholds are very unclear and uncomfortable. You have to understand that the prices of securities and the value of the investments that you have in the fund, essentially represent the collective assessment of all market participants about their risk. So by its very nature, it's not clear. It is a matter of judgment, and that's why we employ investment managers to assess that risk and the return outlook for companies. David followed up and said, I'd like to reiterate my request for some type of tracker which shows the companies where engagement is failing and quote material risks remain, so that the committee, GISP, etc. can consider when divestment may be appropriate. We were told this was in the works a number of months ago, and I think it's critical to show that we are meeting the requirements of our own statement of responsible investment principles. Quote, where material risks remain following engagement activity, we ultimately retain the ability to divest by selling out from any positions. So again, it is the role of the investment managers to judge whether engagement activity is mitigating risk or not. Investment managers, committee, GISP, and so on have an increasing amount of data available to support their judgments, but it is still an uncertain world. I've covered the question about oil and gas price increases. It's very much like any commodity. Capacity can drive prices up and down, as you know, in a fairly unpredictable way. Technology is also a driver. And then I'll finish off. The last point David makes is my understanding is that the policy was being, this is on divestment in particular, that the policy was being developed by David Hickey following the 22nd October 21 meeting, where the committee agreed the following resolution: to instruct officers to identify process and methodology whereby direct investments in fossil fuel companies could be tracked in terms of effective actions by these companies consistent with the UN Paris Agreement. So just to clarify on that point, the responsible investment policy was developed by Falkirk officers, so it was Brian and Alistair in particular, and Lothian officers taking advice from the Joint Investment Strategy Panel, and the committee did approve that. Just make the point that David himself was co-lead on responsible investment matters for Lothian. He contributed significantly to that policy. And I also just want to highlight that Lothian is a participant member of Climate Action 100+, and we engage with one of the world's largest greenhouse gas emitters, representing owners of $68 trillion of assets, that trillion. And the aim of that organisation is to ensure that the largest emitters take the necessary action on climate change. You should know that that policy is very similar to that of most other LGPS funds in the UK who collaborate, and many of whom are counted in that $68 trillion of assets. So then finally, in terms of tracking fossil fuel companies and their effective actions to be consistent with the Paris Agreement, there is a tool that's referred to in the Statement of Responsible Investment Principles, the Transition Pathway Initiative. They actually work hand in hand with Climate Action 100+, and they publicly cover, I think it's 55 to 60 oil and gas companies, and they rank them according to the management of the greenhouse gas emissions and of risks and opportunities related to the low carbon transition. So that's a bit of a long answer. Hope that helps. It's relevant for the engagement and voting paper that you see. You'll see a lot of information about Climate Action 100+ in that document today. And the fund basically uses the expert advice from Climate Action 100+ and TPI and EOS themselves, who do a lot of work in this area. Hopefully that answers David's questions.
Thank you, Mr. Miller, answering the questions for David Morgan. That was really helpful. There was quite a lot there. I don't know on the back of that if there is any other comments or questions from members here that want to come in based on these other questions that got asked. None? Okay, we shall move to the recommendation. The Pensions Committee and Pension Board are invited to note and comment on the contents of this report and the reports provided by Hermes EOS. Agree? Agree, thank you. So at this point now, before we move into a closed business, and it's actually exclusion of the public now, we're going to take a short comfort break for 10 minutes. Okay, thank you.